Today on Business Incorporated, the United Nations Conference on Trade and Development says recovery in global trade to stall again in the first quarter of 2021. AFDB extends financial support to enable West African countries deliver carbon emission reductions. And Zimbabwe to get COVID-19 vaccines from China on February 15. Thank you for joining us and welcome to the program. I'm Chimeze Obi Iwagu. We get the show started with the market numbers, which were mostly positive here on the African continent. Nigeria's NSE was the only laggard at intraday by 0.08%, sustaining the 8-day losing streak. On the flip side, South Africa's JSE index jumped 1.09%, while the EGX 30 in Egypt rose 0.59%. Kenya closed positive on Tuesday. It was a similar picture in the Middle East where major markets were positive except one. Dubai's index was the only loser at intraday by 0.59%. Abu Dhabi's index was higher by 0.07%. The Qatari index advanced 0.63%, while the Saudi Arabia's index rose 0.12%. In Europe, stocks were modestly higher this morning as traders digest a slew of new corporate earnings. However, there are other headliners there making the stories and moving the markets. And Chelsea will give us all the details. Good afternoon, Chelsea. Well, let's begin with German Chancellor Angela Merkel's meeting today with state leaders. They are discussing whether to extend the country's lockdown again. What is expected?
Well, the federal government has already proposed extending the lockdown for another month, so until the middle of March. There does seem to be support for this among other state politicians. The big question, which has been the big question for the past couple of months, is whether they will be able to reopen schools at some point soon. But it seems quite clear now that restaurants, bars, any non-essential business is likely to be remaining closed for the next couple of weeks. This comes even as we have started to see infection rates really fall here in Germany. Today, we reported about 8,000 new infections, but the concern is that these new variants from South Africa and from the UK will at some point start to spread more intensely here. And so what the federal government is saying is that we need to remain on alert and remain in lockdown until we're sure that these variants are not going to really explode here in Germany. It also comes as the EU is very much trying to ramp up the vaccine effort after getting off to a slow start. So I think here there's still a lot of support for keeping things under lockdown until we have a clear sense of how these variants are going to spread and until we have a better sense of the fact that the vaccine rollout is starting to ramp up.
All right, let's look at some corporate news there. Danish shipping company Maersk says it expects profits to rise by more than 25% this year as global trade recovers. How are investors reacting to this?
Well, it was a blockbuster report from Maersk, and investors are not taking it well at all. We've seen the stock fall about 8%, at some point even more. So a pretty big reaction in markets. What some investors are saying is that they had been expecting a little bit more from Maersk, even though they are reporting a surge in profits and very high expectations for this year. But Maersk is really seen as a bellwether for the global shipping industry, and right now, the shipping industry is really booming. There's a huge demand for shipping as we see more and more people shopping online, ordering more things back and forth. As well, there's a huge shortage right now in containers. So prices are very, very high right now for shipping. We've seen a lot of delays. And I think a lot of investors had hoped that Maersk would actually be able to capitalize a little bit more on the demand there is for shipping right now. And they also fear that maybe this is the peak for the shipping industry.
In the meantime, European beer giant Heineken says it will cut 8,000 jobs as it reported that profits plunged in 2020. Is this because of the pandemic?
It is being driven by the pandemic, and this 8,000 cuts to the 8,000 job cuts is going to represent about 10% of the workforce. So it's clear that Heineken is looking into the long term and still seeing impacts from the pandemic. The main problem for alcohol companies like Heineken is that they aren't able to sell in some of their really big markets right now. They're not able to sell, for example, in bars and restaurants, at events, and that's really been a severe blow to their overall revenue, and especially now that we are remaining in lockdowns here in Europe, and the outlook for a reopening of the economy and the reopening of big events is still very unclear. In 2020, for example, in Europe, Heineken saw beer volumes fall about 16%. In Asia, it was down about 10%. So these are very severe numbers, and they seem quite skeptical about a near-term recovery, given the fact that many countries still have restrictions and the economy is not likely to be fully reopened for several more months.
Well, Chelsea, we appreciate those updates from you. In the UK, the pound has hit its highest level against the US dollar in close to 3 years this morning. What's pushing the pounds? Let's hear more from Juliana. Good afternoon, Juliana. Well, sterling has hit its highest level for the first time since the end of April 2018. What's driving the pounds, and is that positive sentiment filtering into the equities market?
Good afternoon, Chimmy. Remember that word, Brexit? Well, it's a Brexit-driven sentiment that's driving the pound. It had been on a pretty bad run for a couple of years. Some would even compare the pound sterling to an emerging market currency, but that's not the case now. As the dust begins to settle, we are seeing sterling rally, which is why it's at a 33-month high. Typically, when the pound is doing well, the FTSE All-Share does weaker, and that's because it's internationally focused. That's where its stocks are coming from. So even though it's not in negative territory at intraday, it should be much higher because we are seeing a rally in commodities. We did see Brent crude oil rising above that $60 threshold on Monday. Now it's the time for coppers. There seems to be a global rebound, lots of positive sentiment, and there are hopes that we can start getting past this pre-pandemic glut. Some of the biggest risers on the FTSE 100 at intraday are Glencore up 7.9%, Anglo American up 2.49%, Rio Tinto up 2.9%, and BHP, they're up at 1.85%. So the FTSE All-Share is up by 0.16% at intraday. The FTSE 100 is up by 0.22%, and the FTSE 250 is down by 0.07%. In currencies, the pound is riding high against the dollar by 0.14%, also up on the euro by 0.11%, and up on the Japanese yen by 0.35%.
Yeah, we talked about bars and pubs this morning. Beer giant Heineken has announced plans to cut nearly 10% of its workforce after a sharp drop in sales due to the coronavirus pandemic. I also discussed that with Chelsea in Frankfurt. But how will this cut affect Heineken employees in the UK?
Well, it will affect UK employees. I think they've got about 2,500 staff across 5 sites and a couple of stores here. What we're hearing is that perhaps only 200 staff will go, which is obviously not great if you're one of those staff. But in the bigger picture, we seem to have come off scot-free here. But, you know, just echoing what Chelsea's saying, it's not been great for pubs and beer owners, as well as those who are owning the establishments. They've been in and out of lockdowns for over a year. When it comes to Heineken, they're the world's second largest brewer, a Dutch-based firm. They went in 2019 from having 2.3 billion euros in profits to last year being 350 million euros in deficit. They've called 2020 one of the worst years for them on record. The reason why they're cutting this 8,000 strong workforce is because they are trying to reap back some of those pre-pandemic numbers. Are they going to get it this year? It is very unlikely. We're not expecting bars and pubs to be open anytime soon. Here in the UK, we're expecting an update on when we can start clawing out of lockdown on February the 22nd. But unfortunately, pubs and bars are not at the top of the queue. We did also discuss, as you were saying, the data this morning from the Pub and Bar Association showing that last year's sales were down by 56% to the tune of £7.2 billion.
And the UK chairman of accountants, KPMG, has apologized for telling consultants at his business to stop moaning about working conditions during the pandemic. He says his words did not reflect his beliefs. But are the workers assuaged by this?
Not sure. Interesting story. Seems to be a very kind of KPMG closed story, but nevertheless, it's been documented. They had a Zoom call on Monday. I believe there are about 1,500 consultants. This is what's being reported who were on the call. They were talking about pay cuts and bonuses. So there are a lucky few that do get bonuses during this pretty tough time. They're not happy with the 11% pay cut. And yes, Bill Michael asked them to stop moaning. Now, there are many who were on the call that believed it was very insensitive. They weren't happy about it. There are those on the other side that said, well, yes, you should stop moaning because there are people that are losing their lives during the pandemic and are happy to have a job. But he has since apologised. There's a statement and he says, I'm sorry for the words I used, which did not reflect what I believe in, and I have apologised to my colleagues. We actually discussed KPMG, the two of us, didn't we? And there was a report citing the 11% pay cut. They don't think it went enough because some of the partners still received £572,000, and that's down from a £640,000 pay. So yes, some of them are not happy with that massive pay cut they received.
Well, the most important thing is that he has tried to correct that by apologizing. All right, thank you, Juliana. Talk to you tomorrow. And shares in Asia Pacific were higher today as Chinese stocks led gains among the region's major markets. By the market close in mainland China, the Shanghai Composite gained 1.43%, while the Shenzhen Component advanced 2.122%. Hong Kong's Hang Seng Index jumped 1.91%. In Japan, the Nikkei 225 advanced 0.19% on the day, while the Topix Index closed 0.27%. South Korea's Kospi gained 0.52% to finish its trading day at 3,100.58. Australia's S&P ASX 200 rose 0.52%. In the U.S., stock futures rose in early morning trading following the regular session that snapped a six-day winning streak on Wall Street. Dow futures rose 74 points, and S&P futures and Nasdaq 100 futures also both traded in positive territory. Better than expected earnings from Twitter, Lyft, Cisco, Mattel, and Yelp boosted sentiment on Wall Street. On Tuesday, stocks snapped a six-day winning streak with the S&P 500 dropping 0.1%. The Dow Jones Industrial Average lost about 10 points. The Nasdaq Composite was the relative outperformer, gaining 0.15% as Facebook, Microsoft, and Netflix all closed higher. And global oil prices rose again earlier today, extending their more than week-long rally after industry data showing a fall in U.S. crude oil stocks added to optimism about an expected rise in global fuel demand. Brent crude future was up 0.2% at $61.20, while U.S. crude added 2 cents to $58.28. Data from the American Petroleum Institute showed that crude inventories fell by 3.5 million barrels in the week to February the 5th to about 474.1 million barrels. Oil prices have rallied since November as governments kicked off vaccination drives for COVID-19 while putting in place large stimulus packages to boost economic activity. And in metals market, gold prices edged up in early trade today as the dollar hovered around a one-week low and expectations of a massive stimulus package in the United States lifted bullion's appeal. Spot gold rose 0.2% to $1,839 per ounce, while U.S. gold futures gained 0.2% to $1,840. Spot silver gained 0.6%. Palladium was down 0.3%, while platinum rose 2.1% to $1,200 after hitting $1,202 earlier in the session. When we come back, we'll look at other developments here on the African continent. Just stay with us. And earlier this week, South Africa announced it will suspend its rollout of the Oxford AstraZeneca vaccine after initial trials showed disappointing results against the new variant of COVID-19. This no doubt dominated headlines, making Eskom's decision to implement stage 2 load shedding take a back seat. Let's look at these issues coming from South Africa, and I'm being joined by Makwe Masalila, the Chief Operating Officer at Makwe Fund Managers. Thank you very much, Mr. Masalila, for joining us on the show. It's always a pleasure to have you.
Pleasure, and thank you for having me.
So, your country, your government has suspended the use of the AstraZeneca vaccine, which were delivered just last week. Has the government given any details about this, its new plans going forward, and what it will be doing with the already purchased doses?
You know, it's very disappointing, and as it is now, we don't know what are they going to do with them. Remember, they were meant for our health professionals. As you know, that health professionals, just like in any country, they are our frontline workers. But what the plans are is that they're looking into getting another one coming from Johnson & Johnson. They're also looking at talking to other suppliers, you know, the likes of Sputnik that is coming from Russia. So whether they're going to go for the refund on these ones or what, we still have to see. But what we can ascertain is that this is another wasteful expenditure, because this kind of mistake could have been avoided. But at least looking forward, going ahead, at least they're engaging with the likes of Johnson & Johnson. But unfortunately, that one of Johnson & Johnson is not yet been approved by our health authorities here that they can be used in the country. Hopefully, they will expedite that so that Johnson & Johnson also get the necessary regulatory approvals. Then definitely people can have the vaccine. And hopefully that one is even going to be more than the 1 million that we received. Without talking plus minus 20 million. The question is, when will we be able to get that?
All right. While the country is dealing with the COVID-19 situation, Eskom is resuming what it called stage 2 of its load shedding, and that started since the weekend. And, you know, the advanced power situation is another downside risk to the South Africans' growth recovery prospects. And looking at all of these things, tackling COVID-19 and then Eskom with its load shedding and all that, which way for the power situation in your country?
You know, it's a very unfortunate situation, and you are right. It's going to have a serious impact on our economic recovery. And you know that stage 2 load shedding was suspended, but today they started implementing stage 3, which is worse than stage 2. So it tells you that the economy still have a very long way to get out of its woes. I think what's going to need to be done with Eskom is to make sure that they get the right people to run that company. They make sure that they plan their maintenance accordingly. They make sure that they get the necessary capital injection, whether it's going to be a question of involving other parties or it's going to be getting private sector involved, or the very same guys who are still there, restructure them and get them to be more efficient. It's just so unfortunate that just like most of our state-owned enterprises, they get to be run by people who, most of them, it's either they don't know what they're doing, or even if they know what they're doing, they're not efficient. They tend to be lazy and take it easy, you know. So yes, Eskom cannot just be led to operate like that. But remember, our country also started embarking on getting independent power producers. There was a tender issued out to get people to start generating and supplying. And also a good thing, big companies were allowed to start generating for themselves. And where possible, whatever excess they will have, they can sell it back into the government. So at least there's some developments, positive ones, when it comes to that end, that people are trying to sort out their own electricity issues as they will be allowed to generate for themselves.
Right. With all of these issues there, the president, of course, is expected to give a State of the Nation address tomorrow. What is top most on the agenda for him?
You know, to tell us exactly the concrete plans to get our economy out of trouble. concrete plans to tell us what is it that he'll be doing with the health issues, as we just mentioned earlier about the disappointment that we've seen with the vaccine, to tell us exactly how long will that take and where will the money be coming from. I don't think we'll be happy for him to leave out the details to tell us that we'll get that when it comes to the budget that will also be presented later this month by our finance minister. I think citizens, investors, everyone, and even our neighbors, they need to know what plans do we have this time around. And I think people are tired of we will or we want to do something. We should be told that this is exactly what we are doing to make sure that we cushion our economy. Bear in mind that we are talking about the economy that has been in trouble even before COVID-19, but we are talking about an economy that has got potential to be able to get out of this current situation. It's not like doom and gloom. It's a question of doing the right things. Example, implementing all the structural reforms that needs to be implemented. And definitely, we will get somewhere. Everyone knows who's serious about money, that Africa is the last frontier. So people, investors out there, they're eager to come and get involved in Africa, not just South Africa, but we need to make sure that we do the right things and have policy certainty so that investors can be able to make proper plans.
Yeah. Mr. Masenela, thank you very much. Well, we will all listen to the President's State of the Nation address tomorrow, and hopefully we would have you back on the show to x-ray some of the points he probably would make on that address. Thank you. Enjoy the rest of the day.
Pleasure.
And the United Nations Conference on Trade and Development says a recovery in global trade is expected to slow again in the first quarter of 2021 as the coronavirus pandemic keeps disrupting the travel industry after world trade contracted 9% in 2020. According to a report from UNCTAD, after lockdowns caused trade to shrink 15% in the first half of 2020, it rebounded in the second half, with global trade in goods up about 8% in the fourth quarter compared with the third quarter. Trade in services stagnated at levels seen in the third quarter, while exports of services from China and to a lesser degree India had fared relatively better than other countries. UNCTAD projects a 1.5% fall in trade in goods in the first quarter of 2021 and a 7% drop in trade in services. However, these forecasts are uncertain due to the pandemic and uncertainty about stimulus packages. And the African Development Bank has extended financial support to a project that will strengthen the efforts of West African countries to meet their nationally determined contributions targets under the Paris Climate Accord. The bank will underwrite the preparation of concept notes exploring the use of internationally transferable mitigation outcomes in selected West African countries. The project is financed through the African Climate Technology and Finance Center and Network, a bank-managed initiative that draws on funds from the GEF Trust Fund and the Special Climate Change Fund. The initiative will help governments develop technical capacity and institutional infrastructure to enable the private sector to access new sources of climate finance, as well as promote new financing mechanisms for energy efficiency and mitigation projects. Zimbabwe will receive 200,000 Sinopharm coronavirus vaccines donated by China on February the 15th, allowing the southern African country to kickstart a campaign to inoculate 2/3 of its population. The information minister says the country is also expecting a separate delivery of an unspecified amount of purchased vaccines from China in early March. The minister adds that efforts to procure other COVID-19 vaccines, such as the Sputnik V vaccine from Russia, are underway, adding that India, like China, has also offered a donation and an option to purchase commercially. Zimbabwe's outbreak is overwhelming hospitals, and 2 cabinet ministers died in January after contracting the virus. That's a wrap on the program. Thank you for watching. I'm Chimeze Obi Iwago.